everyone, John Henry here, slingshotfutures.com, and welcome to the daily futures and crypto market outlook for tomorrow's trading. That's going to be for the 8th of the month, November 8th. Overall, not a bad day of trading. Crude oil was definitely a rangy mess like we were expecting anyway. Lots of movement with some news here and there, but for the most part, kind of a pretty straightforward day. Now, before we jump into the charts, as always, make sure to swing it over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. You'll be able to sign up for our free emailed newsletter that will have this video, but along with that, in the newsletter, you'll have all kinds of different information of anything that's going on, whether it's potential stock setups or cryptocurrencies or anything of interest will be posted inside of there. So make sure you get a hold of that if you haven't signed up already. And then, of course, also, if you haven't done the 3-day trial, it's a free 3-day trial, say that 5 times fast. You can sign up for one here underneath the live Trader subscription and trial info. That way you can kind of hang out with us for a couple days. You can see what the room is about, see how we analyze the markets, and just kind of get a general feel for how we approach everything. So it's a great way to get kind of an inside look in the way that, well, everything kind of works. So make sure to sign up for that if you haven't done so already. Now, taking a look at the charts, the euro, for the most part, we did push down. We got the, well, they didn't, I guess, technically test the objective target to the downside. They missed it by just a little bit, but for the most part, the way that I'm looking at it is they're pretty much done. They had their objective hit. They already got it taken care of. Beautiful move down. It's good enough. We have a potential 3-push wedge bottom that's coming into play as well, right alongside everything else. So right now, we're finding a little bit of a bottom. Now, it wouldn't be a surprise because this was a fairly strong leg down to see them want to retest the lows, but I have to assume that the next retest of the lows is mainly just to finish the objectives off, and there's going to be a lot of buyers underneath that. The one big area that I'm looking at is still back to this big breakdown. They missed that pullback we were looking for by just a little bit. We were looking for at least around there, and they still even missed that by a couple ticks. So the fact that they've missed that and continued to drive lower wouldn't be a surprise to see one more leg down, but I would still like to find a reactionary point outside of that little zone that we have marked up here. If you want to cut it in the middle, we'll say around 16,570 for some selling pressure back to the downside. High side of that would be at around 16,640, and the low side would be at 16,500. Overall, the bears still dominating the market to the downside. We had this nice flag formation. It had really good continuation. Everything is looking really, really nice for sellers to continue this drive lower. Another thing that does sort of stand out here is simply the fact that we might just have a really kind of shallow looking type of wedge. We could be drawing the wedges off the high, something like this, and we're really just having a hard time at the bottom. You know, we had such a massive drive down, and then when it came time to push again, they barely did much of anything comparative to the last time. So we're seeing a little bit of weakness on the lows here, and chances are a lot of sellers are waiting for that better price so they can jump on in at I guess a sale, or what would that be, at a premium, which is kind of a sale for sellers. However you want to look at it, sellers are looking for a better price right now on the euro. Now, over on gold, gold so far really just kind of a wedge. We did have that big blow off on the highs. It did end up, as expected, turning back around. I was really expecting it to go a little bit further up here. They have missed that so far. It's not done yet. I'm going to leave that area on for now because this could just be a secondary leg attempt where they get the blow off on the top. But either way, right now, the way it stands, we're just in a giant range. We could draw the range a couple different ways. You could be looking for a little bit of a low side press here. They have held that area of support already to around 66.2 and the highs at 81.4. Those don't look that bad. There might be a range a little bit further up, I suppose, but capturing most of price action seems to be between 81.4 down to 66.2. And if you want to capture the real big bulk of trading, that's going to be with the low of 74. We're getting stuck on 74 right now, but really it's kind of in the middle of nowhere, and I'm not a big fan of buying that way in the middle of a range. And although we do have a downward trend off of the last few days, if we zoom out, we can see that this might just be a pullback in a much larger bull rally to the upside. So with the sellers a little bit running out of steam, going a little bit more range bound, I would rather just treat this like a range, buy low, sell high, and really both side is fine. The buy side has just as much probability as the sell side right now because the market is trying to make a decision on which way it wants to go, up or down in the bigger picture. So looking to buy low, 66.2 or lower, and looking to sell high, 81.4, and preferably even further, 87.5 to try to fade that blow off high. But for the most part, gold's just kind of a big range. Looking over at crude oil did go into a big old ugly range as expected today. Not really a whole lot. They tried to break out of the highs, but that did immediately fail, and now they're trying to dip back down to the lows. We're creating a tight little range inside of here going into tomorrow. Now tomorrow is Wednesday, and that means that it's inventory day tomorrow. And one big thing that stands out is the fact that we have blown off the highs of the channel. The anticipation is that they overcorrect on the underside of that channel, and these previous little double bottom swing lows might line up really, really nicely for a possible trap in that area for a bounce back up. But that said, we also have this big breakaway move at the end of a trend. A lot of times they like to come back to where that breakaway started, and that would put an area of interest right around those swing highs, and that's around 56.10. So although we do have a shot at the buyers trying to bounce off of this, we do also have to keep in mind that we might find a little bit of an overshoot down here and a major level of support as well. So a couple different areas that we can look to be buyers on. I'm still interested in being a buyer, but I'm not interested in buying way up here. It may have one more leg to the upside, but I don't have a whole lot of faith in that really sticking before it starts pulling back a little bit further for those better prices. So right now, I would rather just wait for the pullback and sit on hands for the longer term on crude oil. I think it's a safer approach right now while the market kind of jumps around and figures out what it wants to do. And then finally, the S&P. Now, the S&P, we're in that kind of double top area that has been a mess. We formed another double top, as if we needed more of those. And when we came back to try to treat this previous level of resistance as support, doesn't look like they paid a whole lot of attention to it. So with that breakdown, could be looking for a quick snap up, which is what we're doing right now, and then continuation lower in the overnight, where we were then come back and retest it fully to see if they want to hold it from there. Now, we've only really closed 2 candles underneath this level so far, and that doesn't necessarily mean that it's full-fledged broken like never look back, but it isn't a good thing either. If sellers are going to hold this down, they're going to be doing it right now for another leg lower, which would be looking for a projection right around those lows, and that also is around the lows of the wedge. Everything kind of pointing towards that 25.76 looks pretty nice. So if we can get another leg to the downside, then we can really disprove that breakout up, and then we can look to use that as a resistance. Right now, it's mostly just short-term resistance. If it does decide to break out higher, then we can use it as support once again, with the anticipation that it will hold this time around, now that they've kind of chopped around it a little bit. But aside from that, the other thing that stands out, kind of like what we were talking about on crude, we blew off the highs of the wedge. A lot of times they like to equalize that with a blow off on the lows. It does also line up really nicely with that trap low around 74, and a measured leg down if we were to measure this up. Puts it right around that same area. So lots of stuff pointing for lower prices, and I really wouldn't mind that either. Looking to buy on sale. I don't want to buy way up here hoping that it works its way through all this resistance. I would rather wait for a little bit more proof so we can see it actually work its way through all of that resistance. For now, I think it's better to sit on hands, wait for some better prices, and see if we can get a dip down to the lows of the wedge. Now, taking a look at the news for tomorrow, the news is really sparse. We only have a bunch of small news announcements, nothing really to worry about. The big thing for tomorrow is crude oil inventories. They are forecasted at a negative 2.876 million. The previous was negative 2.435 million. But aside from that, well, that's it. We don't have any other U.S. news. We don't have any outer country news either. Nothing. It's just crude oil inventories. That's the only big news announcement that we have, so it might be a little bit of a rocky one tomorrow. We'll have to wait and see. Jumping on over to the cryptocurrencies, Bitcoin catching a nice little pullback here off the highs, still working its way down. The buyers are resilient. They are holding these lows very aggressively. We can see these previous swing lows acted as support. They tried breaking through, ended up being a failure, and now we're retesting it again. This whole area right around 7,000 is going to be a big area of contention. If the buyers hold this, this could easily spark another move to the upside, and then we can finish off back towards around 8,000 or so if this does want to continue. Part of me would love to see it back up to 8,000, tomorrow, but the thing is, we really haven't had that healthy pullback that Bitcoin is known for a while. It's been a little bit since we've had a multi-day pullback, and the last time it did, we're talking back in September, where we had that good, healthy pullback all the way down to 3,000 before it rocketed back up. Then we had a minor pullback kind of mid-October, and now we're getting even more extended. So I really would love to see a deeper correction here, and I'm still eyeballing that 67-69 area for a couple reasons now, because now we have a 3-push wedge bottom that also lines up exactly with it, and that would have to have the market go sideways for a little while before we get a test. So I'm still looking for cheaper prices, but we are seeing some signs that the buyers are attempting to hold these lows to drive the market back up. Either way, we are still obviously very bullish in the long run on Bitcoin. It's just a matter of where the market really wants to take off. And for right now, I would rather see that dip down just to kind of maintain its healthy balance of bulls versus bears when it comes to Bitcoin. Now, over on Ethereum, Ethereum for the most part is not really doing a whole lot. We are testing a major area of support here, which is right around 290. We talked about that on the Twitterverse. Make sure to follow us on Twitter if you haven't done so already. We talk about a lot of different types of these sort of setups, and this is no exception. We have a nice 3-push wedge bottom. It's coming into play exactly with the 61.8%, and we also have previous areas of support very obviously throughout here, all coming into one area, and we are holding it very, very nicely, and this is giving buyers an attempt to rally back up again. Now, the one concern that I have is how aggressively bearish this move down is. A lot of times when you have that strong of a move, it's followed up with another attempt lower. So I wouldn't be surprised to see one more dip down, and maybe we get the 786 down to 285. But either way, 290 down to 285 is going to be a hot spot for buyers to start building into positions, looking for long-term opportunities back up towards the highs, back towards 300, and I mean, honestly, even a little bit further. That could be the start of the breakaway all the way back up again. We'll have to wait and see. But right now, we're still stuck in the overall range that we have been for a while, and we're sitting in really on top of, right now, a big area of interest for at least the medium-term buyers. And then finally, good old Litecoin. Now, Litecoin, they've caught a good rip higher. Litecoin is definitely catching a beautiful run up. Buyers did end up using that major level of support, finally getting some movement. We broke underneath it. It failed that breakout. It popped back up. They used it as support, and we have been to the moon ever since. Now, one big thing, we're back again. We're back in that big line in the sand, and this is the area that the market needs to prove itself. We've seen it here before, and the last several times it was here, it did not do so well. So this is a very integral part. This is an important aspect of what the market is going to do from here. Again, I still see Litecoin up in the 150s to 200s next year, but we've got a lot of stuff to work through, and this is one of them. This is the big one that we really need to pile drive through, get above, up to 63, maybe even 64 as proof, and then use it as support for continuation on up to 70. But for right now, well, they've got to prove themselves. We are in a major area of resistance, and a lot of buyers are going to be taking profit here. A lot of sellers on some margin exchanges are going to be trying to short this. We're going to have some trouble here, and they need to step up to the plate if they're going to break through this major line in the sand. Either way, though, it is looking really nice and bullish to the upside. But, worst case, if you're trying to hedge against not wanting to buy directly into this major top, one thing you could look to do is potentially just look for some form of a pullback. Right? We do have this previous channel that you could look for. We have broken above that, and a lot of times they like to break, pull back, and that would give you a nice shorter term, maybe for a day or so on a bounce back up towards the highs. Otherwise, you're waiting for maybe a deeper pullback down to that same area that we've been stuck before, and that's going to be at 58.45 down to 56. Right now, though, I'm just kind of waiting for proof. I want to see what they do. Do they break through? Do they stall? This is a big level, and they've got to do some work to get through it. Over on ADA, ADA has been a little bit of an interesting one. We have a wedge that's been forming, and for the most part, not really a whole lot else has been going on, but we're running out of time on the wedge. Now, most wedges break out about 65% of the way in, and we're floating right around there. We've got a little bit more to go until we start running into that. And if it does break down, there's two different ways that I'm looking at ADA right now. If it does break down, then we get more sale prices. I would be looking for buying pressure around that 250. We've been talking about that for a while now. If it does break up, then we're looking for target objectives back up towards 450s, maybe even further to try to retest, potentially all the way back up to the top at around 680s going into 700s. But for right now, we're in a wedge, and I would love to see a fake break low so we can buy some cheaper prices down at 250 for a longer term hold to continue back up. After that, we have NEO. Now, NEO is another interesting one that really... Ooh, that's the wrong one. NEO hasn't been doing a whole lot, but we are still kind of rattling around those same levels of support or resistance, and we're stuck just smack on top of 26. Now, I get a lot of questions on, well, how do you trade this? Well, I mean, first of all, the obvious thing would be if you want to scalp it, just buy every low and sell every high and you'll be all right. But, long-term trading and what we're looking for here, you can't really trade this right right now. It's just stuck in the middle, so I think you sit on hands throughout this. Got to wait for a little more info. Wait for them to break up, then pull back. Wait for them to break down and buy the dip, right? Sell the highs, something like that. Where it is right now, there's not much we can do other than sit on hands and wait and just kind of let it chop itself out and figure out what it wants to do from there. So although NIO is looking, you know, pretty bad right now, unless you're a scalper, it's not necessarily a bad thing either. We are seeing Bitcoin shed a little bit and rise a little bit and kind of bounce around 7,000, but NIO is remaining unaffected, and that could be an underlying factor of potential strength behind the scenes for NIO in the long term. And then, of course, we have ETP. Now, ETP is one that I'm a big fan of for the long term, and this is one that is going into, well, there's not a whole lot of room left, right? We were talking about how wedges like breaking out at about 60% of the way in. This one is like 85%. They're running out of room here, and this is the same kind of situation we were talking about in ADA. A breakdown basically equals sale prices, and a breakup equals targets, right? We're looking at $3.59 to retest that, and if they can break out further, $4.54. And, well, on the fork that's coming out a little bit later in the month here, I believe it was on the 16th, the fork for Bitcoin, we might see this back up to 10. So you never know. Long term, though, ETP is still looking totally fine, and we're just stuck in a little bit of a wedge right now. So that's going to do it for the market outlook. Hopefully you learned something. Hopefully you found it interesting and you have something you can add to your tool belt for tomorrow. Like we always say, doesn't matter what market you're approaching or trading, always make a plan. Trade the plan, follow those rules, and you'll be A-okay. Until next time, we'll see y'all then.